So we are doing like October, November 2023. October,
Yeah.
November 2023, paper 42. Okay. And this is source A is of ABC costing, right? And
Yes,
source
that's it.
B is budgetary costing.
Yes.
So we are starting with source B first. Can you tell me 3 advantages of budgeting?
Budgeting would help the business to reduce on unnecessary expenses. It helps in decision making.
Mm-hmm.
Um, uh, and it helps with
Controlling
motivation.
costs.
Yeah.
Can you please repeat what budgeting helps you to do?
It helps with controlling costs. It helps with decision making and cutting on unnecessary expenses.
Cutting on unnecessary expenses is controlling cost, right?
Okay. Yeah.
So one more advantage of budgeting would be it motivates the employees to achieve common goals.
Yep.
Okay.
Yes.
So 3 advantages, it is cutting controlling costs, motivates the employees to achieve common goals, and it is used for decision making. Okay.
Yes.
Decision making or forward looking. Forward looking is what? When you budget something and the actual results come something different, then you can take
Yes.
remedial actions, remedies.
Yes.
Are you with me?
Yes.
Okay, let's go ahead. You have to prepare 3 things. You have to prepare a trade receivable budget showing the opening and closing balances for May and June. You have to prepare production budget and you have to prepare the purchase budget. Okay?
Yes.
Are you with me?
Yes.
Okay. When I'm talking about the trade receivable budget, do you know how to make a trade receivable account?
Miss trade receivable account is a T column account. Yeah.
Hmm?
It's a T account. Yeah.
Yeah. What happens in a trade receivable account?
Miss, you write the trade receivables, and when you receive them, you
The
debit them.
balance begin down will come on the debit side, right?
Yeah.
Below that, you will have credit sales, correct?
Yes.
Everything else that is related to the trade receivables will come on the credit side.
Yeah.
What is everything else? That is the money received from your trade receivables,
Mm-hmm.
discount allowed to your trade receivables. If there are contra entries, bad debts, okay, even the closing balance will come on the credit side. I hope you know about the trade
Yeah.
receivable budget, right? So when I'm
Yes.
talking about the trade receivable budget, everything like the opening balance will be on the debit side. Below that, you have credit sales. Everything else comes on the credit side. Everything else, that means the money that you have received, the discount that you have allowed, the contra entries, the bad debts, and even the closing balance. So
Right.
when I am making the trade receivable budget, if I wanted in the statement form, this both the debit side minus the credit side will give me the closing balance. Correct?
Yes. Right.
Suppose balance begin down is 1000, credit sales is 2000, and all this together is 100. Can you give me the closing balance?
1000 plus 2000 minus 100. Yeah.
3000 minus
15,000.
100, so it will become 2900. So what did
2,900.
you do? You did the closing balance, sorry,
Mm-hmm.
opening balance. In the opening balance, you've added what?
Credit sales.
Okay. And you've subtracted the credit side, whatever is there on the credit side. That you will come to know once you read the question. Okay,
Yeah, bro.
so you will get the balance closed down,
Yes.
the closing balance. So this
Yes,
is
right.
what you have to prepare in the trade receivable budget. I will give you like 5 to 10 minutes time. I want you to read yourself, figure out yourself. Those who are watching the video can put it on pause and then come back and solve along with. Okay. What was your target? You have to work on the trade receivable budget, keeping in mind this format. So what is our target? What are we supposed to make?
Yes, we're supposed to make the budget
Trade
for each
receivables
one, trade
budget, right?
receivables.
Okay.
Yeah.
So we know that when we are making the trade receivable budget, first two things that should definitely be there for the month of May and June. So the first two things that should definitely be there is what? Closing
Yes.
balance and the credit sales. Are you with me?
Yes.
So this should definitely be there. So I will write it. This will help me to understand what am I supposed to find out. So I will write balance, opening balance and the credit sales. I will write balance begin down and I will write credit sales.
Yes.
Yes. Come on.
Yes.
So we will try to find out things that is related to all this. Let's read. Read.
Oh, yes. The selling price will be fixed at $20 per unit. March
Okay.
sales are expected to be 20,000 units. There will be a 10% increase in sales volume in every month up to June, and the sales of subsequent months will remain until sales are low June.
Okay, fine. So I know my selling price is being fixed at 20 per unit and they have given me information about March. What I usually do is that whenever I get information, I try to put and I try to make things related to all the information that is there, not only for the months that is been asked to make. Are you with me?
Yes.
So we have been given information about which month? March, April, May and June. Are you with me?
Yes.
Selling price is 20 per month and March sales are expected to be 20,000 units. So I would say that my sales in units for March is how much? 20,000? Yeah?
Plus 20%. Yeah.
Okay. So my sales in March would be 20,000. So every month it is expected to increase. Tell me.
10%. So by
Every month it is
2,000.
expected to increase by how much? 10%. So it will
2,000.
become how
Yeah.
much? 22. 22,000 is 110% of 20,000. Yeah.
Yes.
Then,
Less than 10% of 22,000, right?
hmm,
So it will be 2,200.
no, darling, 110% of 22,000. Every month it is expected to increase by 10%.
Okay, so it'll be then 24,000.
So this will become 24,200. And again, 110% of 24,200. So this will become
So
how
it'll
much?
increase by 2,420.
26,620. Are you with me?
Yes.
Okay.
Yes.
Now I might know my selling price is 20. So let's find the total sales in the dollar value. Because they are telling me credit sales are 75% of the total sales.
Yes.
Okay. The credit sales is 75% of total sales. So in order to find my credit sales, I need to know my sales in dollar value.
Yeah.
So what is my sales in dollar value?
400,000.
Okay.
440,000,
Hmm.
484,000,
Hmm.
and then 524,000.
Now credit sales is 75% of my total sales.
Yes.
So find out.
300,000,
Hmm.
then 330,000,
Hmm.
then 363,000,
399,
and
300.
then 399, 300.
So I have already got my credit sales now for May and June.
Yes.
What is my credit sales for May and June?
363,000 and 399, 500.
So I've got my credit sales. One is 363,000 and one is 399, 300. Are you with me?
Yes.
Okay.
Yes.
So I've used up this information. Now I am looking for my balance begin down, money received, discount allowed, and all those things. Are you with me?
Yes. Yeah.
Okay. Read the next part. Can you read, please?
40% of, yeah, 40% of credit customers will pay in the first month after the sale and receive a 5% cash discount. The remainder of the credit customer will pay in the second month after the sale.
Okay, fine. So whenever I am doing my sales, okay, 40 per this is my credit sales, 300,000. 40% of this will pay me in the month of sales, in the first month after sales. That means
So
when
the
are they
next
going to pay me?
month.
Okay, so they are going to pay me in the first month after sale, that means over here, and receive 5% cash discount. The remaining
Yes.
will pay in the second month after the sales. That means 35% I will receive over here
And
this month
60% after the
sales. Yeah,
yes.
5% I will give them cash discount. Yes,
Right. Yeah, right.
and 60% I will receive in the next month.
Yeah, that's right.
Okay, this is related to this 300,000.
Yeah.
Check properly.
Yeah,
Related to
that's
this
right.
300,000, I will receive 35% here. 5% will be my discount and 60% I will receive in the next month.
Yeah, that's right.
I want to make for May and June. Now let's talk about this. For 330,000, 40% I will receive over here. 5% will be the cash discount and the remaining 60% I will receive here.
Yeah.
Yeah.
Yeah, yes.
Now let's talk about this 363,000. What is about the 363,000?
We should get 35% in the next month, 5% cash discount,
So
and
this
then 60%.
363,000, 35% next month, 5% cash discount, and the remaining next month. Are you with
in
me?
July. Yeah.
So when I am talking about the opening balance of the May, June, okay, May and June, this would be there.
This major would be screen.
I want the opening balance of my May, June
Yeah, right.
trade receivables. See, this money I will receive entirely in May.
Yeah.
Yeah, I want opening
Yes.
balance of my trade receivables. This money I will receive entirely in the month of May.
Miss, so it will be the 60%
I
of
want my
April.
trade receivables opening balance. That means I want to know the opening balance of the people who have not paid me.
Miss, so it will be 60% of the previous month, yeah?
Hmm?
60% of the previous month.
Let's check. For the month of April, okay, I will receive this much, but 60% I will not receive in the month of May. So my
Yeah, Miss,
trade
exactly.
receivables opening balance would be 60% of the previous month.
Exactly.
Of which month?
Of April.
And
And this the current month.
I want the opening balance of my trade receivable on the first date of May, June.
Yes.
Think over it. Think over it. I will pause the video. Understand one fact very clearly, that at the beginning of May, this full 330,000 is spending.
Right.
Okay? This full 330,000 is pending, and 60% of this is pending. March is pending. First, think over it and answer that too.
Miss, like the
In the beginning of May, I want the opening balance of my trade receivables. So,
so you're
in the
saying
beginning of
60% of
May,
March.
related to the March sales, okay, related to the March sales, this too is done. 60% was pending, which I will receive. That is another question. But in the
Okay.
beginning of May, what is outstanding to me? The thing that is outstanding to me is 60% of this month, this sales, and
Okay.
entire 100% of the previous month sales. So
Okay.
this
Right.
becomes the last month. So this becomes the last month, and this becomes the previous month. This you should know first.
Okay.
So when I am talking about the opening balance of trade receivables, it would be 60% of the previous month. That means 60% of the previous month. That means it is 60% of this, the March sales, and
Yeah.
100% of last month. Because
Let
I
me
will
just write that
receive
down.
40 now, but at the beginning of the month, this full amount is pending. And 60% is
Yes.
pending, which I will receive.
Yep.
Yes? Are
Yep.
you
Sure.
sure?
Yeah. I got it now.
Okay. So when I am talking about my trade receivables opening balance, okay? Which balance?
Trade
Opening
receivable.
balance. What will it be?
Yes, it would
60%
be. Yeah.
of previous month and 100% of last month. Are you with me?
Yeah. Miss.
So it would be 60% of 300,000. And full last month, that is 330,000. 60% of 300,000. So this is 180,000. So it would be 180,000 plus 330,000. So 510,000. Are you with me?
Yes.
Now, when I come to the June opening balance, this will become the last month and this will become the previous month.
Yes.
Yeah? So what will be
Yes.
for June? 60% of
Yeah.
previous month.
Yes.
So what is the 60% of previous month? 393,000. 60% I'm going to
Yes.
receive now. So 60% of 330,000
Yes.
and 100% of the last month. So full 363,000. So it is coming how much?
Let me just calculate it. $180,000.
Sorry,
With 60% of 300,000 is coming from
330,000 and
60% of
98,000
330,000 is 198,000.
plus 100% of the last month. So this is
Yeah, so
561,000.
yeah.
So this is 561,000.
Yeah.
Are you with me?
Yeah.
So the total of the debit side is how much? 510,000 plus 363,000. This
That's
becomes
870.
873,000. 561,000 plus
960,300.
399,300. 960,300. Okay.
Yeah.
Now we'll talk about the bank and the discount allowed. Come on. We want of May and June, right?
Yes.
So in the month of May, when I'm talking about my bank receipts, yeah.
Yes.
So what I am going to receive is 35% of the
Yeah. The last one.
35% of the last month.
Yes.
And I'm going to receive 60% of the previous month.
Yes.
Yeah. So in the month of May, bank receipts, when we're talking, what will it be? Come on, tell me.
You must select it'll be 35% first. And then what else do we have?
Bank receipts.
Yes.
It would be 35% of which month?
The last month.
Last month. And 60% of previous month. So this is the rule that we will follow. Previous month is always the month before the last month.
Yes.
Okay. And then there is discount allowed.
Miss, aren't you already subtracting that by just taking 35% directly?
No, but even discount allowed comes in the trade receivable budget, right?
Yeah, that's right.
Yeah.
Yeah, yeah, right.
You forgot the format.
No, miss, I just thought that we're
And
already
discount
considering
allowed
that
would
because
be
we are
what?
taking 35%.
Discount allowed would be 5% of the
5%
5%
last
of
month.
the last month. Come on, now let's calculate. 60% of the previous month. This is the previous month. So 300,000 into 60%. So it will become 180,000. Yeah.
Yes.
35% of last month.
Mhm.
330,000 into 35%. 115,500. Plus 180,000. One net weight, huh? 5% is the discount. 40% you will receive 330,000 into 40%, 132,000. And 300,000 into 60%, 180,000 plus 132,000, 312,000. So your bank receipts is how much?
Yes, it's 35%.
40% of the last month. You're going to receive 40% of the last month, and from that you
Yeah.
will give a discount of 5%.
Yes.
Okay. So what is the 40%? 330,000
40% of 330,000.
into 40% is 132,000. But you will not receive this entire 132,000.
Okay,
You are
5%.
going to give a 5% discount of this 132,000. So 132,000 into 5% discount. So that 5% discount is 6,600.
Yeah.
So what you receive is 132,000. 932,000 is 35%.
Yeah. Yeah.
So that becomes 125,400.
Yeah. That's right.
Okay, just understand this properly. You are going to get a discount on this. So whenever you're going to pay this, it will be you're going to receive this 40%, and from that you will give 5% cash discount. So it will be
Yeah, that's right.
35% of this 40%.
Yes.
So what you will receive is 125,400 plus 180,000. So this is 305,400. Yeah,
Yeah, that's right.
come on. Let's talk about which month? June.
Mhm.
So it will be 40% of the last month.
Yeah.
So what is 40% of the last month? And 60% of previous month. So for June, the previous month is 330,000. So 60% of 330,000 is how much?
198,000.
198,000. And 40% of last month. So 40% of 363,000.
That's 145, 200.
363,000 into 40%. So this will become 145,200. But you have to give 5% discount on this.
Yeah.
Into 5%. So 7260 will be the
7260.
discount. 145,200 into 35% will become 50,000. Sorry. 145, 200 minus 7260. So this becomes 137, 940. Yes.
Yes.
So what you receive is 137, 940 plus 198,000. So this will become 335, 940.
Yes.
I'm giving you time. Do it. I'll wait for you.
For
Can you give me the total of the credit side now?
yeah, miss. I got 561,000.
This total is 561.
Oh no. Okay. Yes, yeah, it
305
yes, 312,000.
plus 6,600. So this is
312,000.
312,000. So balance
Yeah.
closed down will be 1 minus 2. That means the debit side minus the credit side. So it will come up to how much?
561,000.
561,000. And how about the total of this?
343, 200.
3.
43, 200.
So the balance closed down will become how much?
617.
617, 100.
Yeah.
Okay. So with this, we completed the which budget? We complete the trade receivables
Your
budget.
receivables budget.
Okay. Now, which budget they've asked us to make? They've asked us to make the production budget. Okay. Now, since they've asked us to make the production budget, they should give us the information about the production budget. But do you remember the format of your production budget? And they want in units.
Yes.
So, do you remember the format of your production budget?
No, not really.
Why?
It's not. I'm
It
going to
is
my mind right now.
closing inventory, add the units you are sold. How do you
Oh
know
yeah,
the
I'd say it's
units
less opening.
produced? Less the
Yeah, miss, I
opening
remember now.
inventory. Less opening inventory would give you your units produced.
Yeah, miss, I remember now.
So you want the format of your production budget. So it is closing inventory at sales minus opening inventory. You will get units produced. So they will give you some or the other information about the units produced. Are you with
Yes.
me? So come on, I'm
Yes.
giving you 5 minutes time. Try to figure out. So we have to make the production budget, okay? And the production budget has to be units. Can you give me the format of the production budget, please?
Sure, miss. It's closing inventory.
It is
Sales
closing
plus a closing
inventory at sales
and less closing inventory.
less opening inventory,
Sorry, yeah.
less opening inventory. You will get the units to be produced. Are you with me?
Yeah, miss.
Okay, fine. Now I have my this chart that I had made for the sales and the units, right?
Yeah.
Okay. So I'll just copy this and I will bring it down over here. So these are my sales. What are my sales for May and June that I have to directly put it?
Yes.
So what are my sales for May? It's 24,200 and for June it is 26,620. I will directly put it. I don't have to think anything about this.
Yeah.
Now let's talk about the closing inventory and the opening inventory. Finished goods inventory is budgeted to be 25% of the following month's sales volume.
Yes.
Okay, following months means what?
The next month.
Next month's sales. So when I talk about the closing inventory, So the closing inventory would be the next month's sales. How much percent?
25.
25%.
Right.
Okay, fine. So the closing inventory for May would be how much?
26, 620. 25%
Would
of
be
that.
25% of 26,620. So this will become
Right.
how much?
It will be 6655.
6655.
Right.
And the closing inventory for June will be how much?
It will be the same.
Sorry?
It will be the same.
Why?
Yes, because it says that we have the same amount of units sold after June.
So they say sales subsequent to the month of June will remain at the sales level of June.
Yeah.
So that means any other sales after June, it will be remaining at the same level of June. So it will be 26,620 only. So closing inventory
Right.
for June will be 25% of which sales?
26, 620.
Of next month. Yeah. So
Yes.
25% of next month is 26,620. Sorry. How much?
6655.
6655. And how about the closing inventory of April?
Yes, sorry.
Closing inventory of April?
Closing inventory of April would be 25% of 24,200.
25% of 24,200. So it will become how much?
And that way.
6050.
Yeah. So thereby.
Okay. So the closing inventory is 25% of next month sales.
Oh, yeah, next one.
So this will become for May it is 6655 and for June also it is 6655.
Yeah, yes.
Now opening inventory.
Miss closing of last month would be the opening of current month.
So closing of this will be opening of this 6050
Yeah.
and this would be 6655. Suppose if you don't
Right.
have information, so when you take the opening inventory, you can also take it as 25% of current month sales. Okay.
Yes.
Okay. So opening inventory is 6050 and 6655. So what is the units to be produced?
24,805
24,805 and
and 26,620.
26,620. Okay. Are you with me?
Yeah.
Now what have they asked us to make?
Miss
After this, what they've
purchase
asked us to
budget.
make? Purchase budget.
Purchase.
And the purchase budget should be in what? It should be in dollars. Yeah. Let's see what
Yes.
information they've given about purchase. Each unit requires 4 kgs of direct material, which is costing 1.50 per kg.
Yeah.
Closing inventory of the direct material is 50% of the production requirement in the following month.
Yes.
Okay. So they want us to make the purchase budget. Whenever I am going to purchase, I'm going to purchase in what?
Dollars.
Kgs. Whenever I'm going to purchase, I'm going to purchase in what? Kgs. So I know now my units produced for May and June.
Yes.
Can I find my units produced for July also?
Yeah.
How?
Because we have the sales units.
Closing inventory would remain the same,
Yeah,
and opening inventory also would remain the same, 6655.
exactly.
Yeah.
Yes,
So units produced for July would be how much? 26,620.
26,600.
Are you with me?
Yes,
Okay, fine. So now I have to make a purchase budget. I'm giving you time, work for it. So I need to make my purchase budget. Okay. I need to make the purchase budget for May, June. Are you with me?
yes,
And when I'll do the working, I will do the working for July also, and 1 month prior also I will do maybe March, April. Are you with me?
yes,
You made the production budget, right?
yes,
You made the production budget and you have the production budget for May and June. What is the production for May?
for me, 24,805.
Production for May is 24,805 units.
Yes,
And for June, it is how much? 26,620.
yes,
And for July also, it is 26,620. We had found out. Are you with me?
yes,
Now, every unit requires 4 kgs of direct material. So, every unit that you're going to produce, what is the requirement?
4 kilos.
Your requirement is you need 4 kilos per unit. So, you will multiply by 4.
Yes,
Hmm?
yes, right.
So, it is how much?
It's 99 to 20.
99 to 20. 106,480 and 106,480. Are
Yeah,
you with me?
yes,
Okay, fine. Now, when I am making the production budget, what purchase budget, what I will purchase? I will purchase for the units that I have to produce. You will add the closing inventory and you will minus the opening inventory.
yes,
Yes?
yep.
Okay, fine. So come on, let's make the purchase budget. First, come on, talk about the closing inventory.
Because it needs to be 50% of the following month.
So your closing inventory would be how much?
50% of the next month's production.
Your closing inventory is 50% of next month production. Yes?
That's right.
Come on. So closing inventory for May would be how much?
13,410.
Sorry?
13,310.
How?
It will be 26,620 divided by 2.
Okay, this is the production in
Okay.
kgs. Okay? In
It will
kgs.
be 53 to 40.
So it would be 50% of 106,480.
So that is 53,240.
53,240. How about closing inventory for June?
Yes, it would be the same because it is same amount of
Okay, it will be 53,240. So we are making the production budget in kilos first, then we will find it in dollars. Okay, so this is closing inventory. Now what will you add? Production of the current month, right? Because you are going
Yes.
to produce this. This is the closing inventory that you're required to make.
Yeah, that's right.
They're required to produce. So you will add production of current month.
Production.
How much? 99,
220.
220, and 106,480. Minus what? Opening inventory.
Yeah.
If closing inventory is 50% of the next month, opening inventory would be 50% of the current month.
Yes.
Okay. So it is 50% of current month.
49,620.
Sorry, 49
49,610.
and
Miss along.
106,480 into 50%.
53,240.
53,240. So you will get what you want to purchase in kilos.
Yes.
How much?
102,850
Yeah.
and 53. Sorry, 106,480.
But you want the purchase budget in what?
In
Dollars.
dollars, so you just multiply it with 1.5.
Okay. So purchase budget in dollars, you will multiply it by dollar 1.50 per kilo. So you will get how much?
154,275.
And
159,720.
okay. So with this we complete the purchase budget. There is one more part of it, this is the advice part, and then you can solve this entire sum once more. Okay.
All right.
Now read the advice.
During the budget committee meeting, the sales manager requested 100,000 for a sales promotion for
Can
the
you read it
existing
louder
product.
or let it be? I will read it. During the budget committee meeting, your sales manager requested 100,000 for a sales promotion for existing product. Production manager requested the same amount for research and development of new product. So your sales manager is asking you for what?
100,000 for
For what?
promotion. For promotion.
For promoting existing product. And your production manager is asking the same amount for what?
For developing a new product.
Okay. Accountant reported that due to a financial constraint, only he can do one request. Only one request can be allowed. Which one to allow? Justify your answer. So what is the first request?
For the sales promotion.
Your first request is sales promotion for existing product. You need to speak
Yes.
3 points for this.
Yes.
What happens when you do sales promotion for existing products?
This will help increase the sales.
It can help you boost your sales. It can help you increase the demand. It will promote the reputation of the product, goodwill of your company. Your product life cycle uh, may may reach the declining stage later. Okay.
Yes.
What will happen if you go for research and development of new product?
Yes, it could help possibly like match with the growing case of people.
Possibly a new product would come in which will be competitiveness for the business in
Yeah.
future. However, you do
Yes.
not know if the new product is going to be successful.
Right.
And if you release a new product, the benefit that you will get from the new product will take some time to get. So advise the budgeting committee what they should do.
Yes, I'd say that they should go for a new product
They could
because
go
the
for a
current
new product
eventually have.
because the existing product may already be at a declining stage and may ultimately move out of the market. Okay, so this is what you can advise, and 1 mark you get for advice, and this is total for 7 marks. So with this we complete October November 23 paper 42 question source B. Okay.